Hi everybody, Mike Chambers here. I'm sheltering in place like all of you. Welcome to my makeshift office in my personal residence. In fact, behind me I have a whiteboard. It's actually my sliding glass door. It's the back panel, but desperate times calls for desperate measures. I actually tagged white cardboard behind it with some painter's tape and a dry eraser marker. Voila. Business banking is up and running. Granted, many more of us are putting in more work from our home. The last 2 weeks, I've been able to talk to well over 100 entrepreneurs. One of the things that kept coming up was a discussion about Fed funds going to 0%. So I thought what I would do, since we all have some downtime and communication is key right now, I would maybe clear that up. One thing I want to tell you about Fed funds going to 0% is it doesn't actually directly impact your loan. Now, some of the indexes that we use tied to loans may be influenced by it. It won't move as much, but I thought I'd give you an example of what Fed funds means to you. As a bank, my job is really two things: get loans that pay back, but also get deposits. You're supposed to interface with your community or your marketplace, and really, you're supposed to gain their trust enough to get their deposits, and we take that money and we fund our loans. But since these are liquid and these deposits don't always stay with us, I can never control if 10, 15, $20 million gets pulled out of my bank that day. One of the many wonderful things our federal government does for us in banking is they stand ready with Fed funds, and they say, if you fall short one night, and in this example, if you have 100 million in loans and only 90 million in deposits, we're gonna make you whole and you can borrow 10 million from us. And that's where Fed funds comes in. That's why you'll also hear it occasionally referred to as the overnight rate. One of the things I want to illustrate with you is right now it is at 0%. They're doing that to help us because there may be a shortfall in deposits with business kind of grinding to a halt. But let me give you an example. About a year or so ago, Fed funds was around 2%. Well, what happens when I'm borrowing from the Fed at 2% versus 0%? I have an opportunity now to go out to you as entrepreneurs and consumers and say, how about I offer you a CD or a money market? Something different than just a normal checking account that has no interest rate on it, or a savings account with a small interest rate on it. And I can go out and give you a 1.5% rate so you can share in this. I can pay you and also save money at the same time. It's a win-win. And that's why CDs and money markets exist. What happens when 2% fell to 1.25% or 1.5%? Well, it creates downward pressure on CDs and money markets. And you're gonna see everything squeezed down to that 1% range. And now that it's down to 0%, it could go down to nothing. Now that's probably not gonna happen. But in theory, if your bank is giving you anything more than 0%, it's really just for relationship value because they can get it from the Fed at 0%. How crazy are these times? I'm actually using a selfie stick. Look, your money markets and CD rates will inevitably come down, but banks are generally safe institutions for you to put your money in, and safety is all that matters at a time like this. If you like these videos, please like us on LinkedIn. Please follow us on LinkedIn. We'll welcome any comments or questions that you want us to cover in upcoming videos. If you're in the LA or Orange County market, Partners Bank of California is fully operational as a business development unit thanks to our newfound technology skills. If any entrepreneur needs any help or wants any specific questions to their situation, please reach out to us. We're here to be your banking partner.